Welcome to the Savvy Shopkeeper Retail Podcast. I'm your host, Kathy Cruz. I'm a former brick and mortar store owner turned retail expert who is passionate about entrepreneurship and has experienced the highs and lows of running a retail business. Whether you're a seasoned retail veteran or an aspiring store owner, consider me your guide on this store owning journey. If you're looking to run a profitable and growing business that doesn't drain you, follow my 6 stages of shopkeeping and subscribe to this show. Join me for a journey of continuous learning where protecting your mind, maximizing profit, and determining your own schedule are a priority. Get ready to work smarter, profit more, and grow your retail business. Welcome to episode 233 of the Savvy Shopkeeper Retail Podcast, Cash Flow Uncovered, Why Cash Flow is More Than Your Revenue. I'm your host, Kathy Cruz. My intention for this episode and a couple of future episodes is to bring you some clarity on cash flow. There's a lot to unpack when it comes to cash flow. So this will be a series of podcasts, and even then it won't be enough to cover everything that's involved when it comes to cash flow in your business. It's top of mind for me right now because I'll be hosting a year-long, I don't know if we're going to call it a challenge, but a year-long, we'll just say challenge for now, a year-long challenge in Master Shopkeepers in 2025. Yeah, this is going to be year-long. Every month we're going to be doing something. I'm going to be teaching something. I'm going to have you do something related to cash flow. And if that doesn't convey how incredibly important cash flow is, the fact that I'm doing a year-long challenge, I don't know what does, but it is that important for a retailer. Cash flow in a retail business refers to the movement of money in and out of your business over a specific period of time. It includes not only the money coming in from sales, what you would see on your profit and loss statement titled income, but also the money going out for various expenses. It is a broad concept because it really encompasses all financial activities, not just the income generated from either selling products or offering services. And some of you do both. So let's unpack when I use the words inflows and outflows. Let's unpack exactly what that is. Inflows, of course, is the income that comes from people buying products in your stores or you offering services to them, you handling the transactions at the cash wrap, maybe invoicing customers. Inflows also come from loans or returns on investments and then other sources. Outflows, and brick and mortar store owners have many of these. That could be payment for rent, payroll, inventory, utilities, marketing, loan repayments, taxes, all the things. We know our operating expenses for store owners, it's a long list. And if we break cash flow down even further, there are 3 types. There's operating, financing, and investing. So operating cash flow, this is related to your day-to-day activities like sales and expenses. Financing cash flow, that's money in or out related to borrowing, repaying loans, or investor dividends. Although most of you are like, Kathy, I don't even have investments. How am I going to get dividends off my investments? I just want to say that. I know, I get it. And then there's investing cash flow, cash spent on or received from investments like equipment or property or other long-term assets. Cash flow shows how well a business can manage short-term liabilities. So if you've ever wondered, why would I look at my cash flow statement? This is one reason why. It helps you manage short-term liabilities, invest in growth, or weather periods of low sales. Without proper cash flow management, a profitable business, this is important, a profitable business can still face financial difficulty. So you're going to start to hear me talk about all 3 financial statements much more in the future and definitely into 2025. So where you see profit is on your profit and loss statement, your income statement. But where you see your cash flow report, that's your cash flow statement. So, although I really focus on profit and making your business profitable, there are other parts and pieces that all connect to each other. So, I don't want you ignoring these other financial reports. By understanding cash flow holistically versus just looking at your income, retail business owners, like, you can make much smarter financial decisions. You can ensure that you have enough money to cover expenses and plan for future growth or investments. When you aren't paying attention to cash flow, you're often making blind decisions regarding investments and growth. And that's one area that I want to help. I don't want you making those decisions blindly. Cash flow, it's often referred to as the lifeblood of a business because it directly affects the ability of a company to function on a day-to-day basis and maintain operations. Like, this is how you keep your doors open. So I just want to cover 6 reasons why. And I just kind of touched on one is it covers daily operations. Like, cash flow enables your business to pay for those essential operating expenses like rent, utilities, payroll. It ensures liquidity. It ensures that your business has the cash to cover those short-term liabilities. And when I say short-term liabilities, a good example of that are your credit card bills. Positive cash flow means there's always enough money available to handle ongoing expenses without having to borrow or take on additional debt. Number 3, it supports growth and investment. Healthy cash flow allows a business to invest in growth opportunities like expanding locations, purchasing new inventory, hiring additional staff, and upgrading equipment. Number 4, it protects against financial shocks, or what I call cash flow crunches. And you've heard me talk about this before. It'll also help you face unexpected costs and then those slow sales periods. And that's usually when the cash flow crunches happen in retail. Number 5, it keeps credit strong. So managing cash flow well, that demonstrates to lenders and investors that the business is financially healthy. This is also another reason why I want to really start to unpack these other financial reports in your business, because if you're looking to get financing, if you're looking to get a loan or a line of credit, those 2 other reports, other than your income statement, are incredibly important to a banker. And number 6, it sustains profitability. Even profitable businesses, like I mentioned, can run into trouble if their cash flow isn't well managed. And I know for some of you that's hard to grasp. So we're going to just slowly, over the course of the year, unpack this, and for sure a little bit more in the next 2 episodes, because this is going to be a series of 3 episodes on cash flow. But one example that I share is that having high revenue, it doesn't guarantee you have money to pay bills if that revenue is tied up, for example, in accounts receivable or in inventory. So you could make $1 million in sales, but if it's all caught up in these other parts of your business, you're not cash flow positive. Some of you might be thinking, well, I don't have accounts receivable, but some of you actually do. So for example, if you're a print and gift shop, you might have corporate accounts. And when you invoice those corporate accounts for the printing services you provide, you're then waiting to receive payment from those corporate clients. That's accounts receivable. Some of you may not actually be reporting this correctly in your financial statements. So I just want to make sure that I mention that many of you are traditional brick and mortar retail. You buy inventory, you sell it. But there's a wide variety of people that listen to this podcast. So I want to make sure that I'm speaking to them. And some people do have accounts receivable. So in essence, cash flow keeps the wheels of the business turning. And without that healthy flow, your operations can stall, your growth can get halted, and then the business risks financial instability. This episode is brought to you by my new free resource, Valuable Data to Collect for Your Brick and Mortar Store. One of the questions I hear most often is, how is my business making money, but I'm not making money? I ran a profitable brick and mortar business from day one, and the reason why is because I used data to make decisions. In my new free guide, I'm sharing all the systems that I would set up and the data I would collect if I were to start a store from scratch again. Whether you're preparing to open or you've been open for years, it's never too late to start tracking. Visit savvyshopkeeper.com/data to get the guide. Cash flow is just a crucial indicator of a company's financial health. I've unpacked that cash flow is everything flowing in and out. And this is the point of this podcast episode, is that even though it's everything that flows in and out, a lot of retailers are often focused solely on revenue as cash flow. You're checking your app every day, sometimes every hour for sales reports. Sometimes you're looking weekly, monthly at those sales statistics and only sales statistics. Like that's the only part of your business that will help it thrive or grow, but that's not the case. And when you do that, when you're only paying attention to the income and the revenue, everything else gets ignored. And I get it. You need the income to support your business, but you can't ignore the rest. Like you can't ignore your debt and you can't just let operating expenses grow to the point that they're drowning your business. You can't ignore the balance sheet and you definitely shouldn't ignore the cash flow statement. One side note regarding debt is that I just said that you can't ignore it. And most of you that carry it, or many of you that carry it, you carry it with this really heavy weight. So in fact, you probably don't ignore it, but you do demonize it. And I have an upcoming episode on this topic because I also think that's an important thing to talk about. Because when you're carrying that extreme heavy weight or guilt or shame or frustration around debt, that can also suffocate the cash flow in your business. So I also want to unpack that in the future. I can't stress this point enough. A big revenue number doesn't define financial success. And I want to say that one more time. A big revenue number doesn't define financial success or business success. So for example, I've known two shopkeepers that had businesses open at the same time. One was a $500,000 business, while the other generated less than $150,000 a year. The $500,000 business struggled to make a profit for years, and in fact, probably showed a loss all of those years, while the $150,000 business owner profited $35,000 in 1 year. Now, you might be thinking if you're a really big retailer and you generate $1 million or $2 million in sales, that's peanuts. But for retailers who are starting, and for a retailer who's like literally in stage 3 and generating $150,000, that's a real micro retailer. But for them to pull $35,000 profit out of that $150,000, that's substantial in retail. And listen, I love a big goal. And as a business owner, I have revenue goals. I do. But what's more important to me is cash flow and profit. I don't just focus on my sales because I know that all the other parts are equally important and that my volume of sales don't necessarily define my business success. With that, I've spent a lot of time on this podcast and in Master Shopkeepers talking about the profit and loss statement, like I said earlier, and profit, and I'm sticking to that. But I just want to share a list of podcast episodes that you might find helpful if you're like, okay, Kathy, I've been avoiding all of this, and it's time for me to go back and listen to some of the podcast episodes that you've recorded on that particular topic. So I just have a list of 5. Episode 44 is the retail profit pie. Episode 62, tips for cutting your retail expenses. Episode 65, stop believing these retail myths. Episode 77, 5 reasons you need a bookkeeper. And episode 211, 6 bookkeeping tips for shopkeepers. Now, when I share the number of a podcast episode, always know that you can just go to savvyshopkeeper.com/episode and drop in the number of the episode. So for example, for episode 211, it's savvyshopkeeper.com/episode 211. So again, I do believe your profit and your income statement are incredibly important, but they are two pieces of a very big puzzle. If you're in Master Shopkeepers or you've been considering joining and applying to join Master Shopkeepers, you'll be able to participate in cash flow clarity with us as a group in 2025. That's the name of the challenge. And again, I'm not sure if I'm going to call it a challenge, but we're just going to say challenge. Of the challenge in Master Shopkeepers next year, it kicks off in January. And here are some really important things, whether you're a group member or you're considering joining, that you need to have in place in order for you to fully participate every month in 2025 regarding cash flow. So number one, you want to have your bookkeeping in place and caught up. Now, it doesn't mean that you have to have it all in place and caught up January 1st, but I would say by March, it needs to be caught up and reconciled for all of 2024. So yes, you have a grace period. No, I would never expect anyone to have it all done January 1st. But I do think it's going to be important by March for you to have that in place. Two, you're going to want to have all three of your financial reports: your income statement, your balance sheet, and your cash flow statement. Your balance sheet, you'll want to make sure that it actually balances. So that means you may need to go to your CPA, your bookkeeper, whoever helps you with this, with the bookkeeping, or maybe take a class to figure out how to get it to balance and make sure that that's accurate. Number three, a good point of sale system with access to sales reports. Funny, I keep saying that revenue isn't the only thing, but we do want to look at it. So a point of sale system with sales reports, at least for a year, ideally. And then four is an inventory system with minimum 1 year of data, meaning you have everything in your store listed in your inventory system. It has a retail price and it has the cost, what you actually paid for that item. Those are the four things that are going to be the most ideal. Now, there are going to be master shopkeepers who attend these classes and who attend these sessions, and maybe they don't have everything in place. But what I do appreciate is that they show up to learn. They may not have the data, but they're showing up to learn in advance, because we have some master shopkeepers in there who haven't opened yet or who just opened and may not have that data. It doesn't mean that you can't learn from it. Okay, it's time to wrap this up. I am not dismissing that revenue is important and strategizing to grow your revenue isn't important. Those are very important. However, when you pay attention to all the other cash flow, all the other cash that flows in and out of your business, you'll get a more realistic picture of your business. And that's my message to start. You'll make decisions holistically instead of from this little revenue bubble. In part 2 of this cash flow series, I'm going to talk about what's draining your store's cash flow and then identifying the root cause of it. So I know today's podcast episode was pretty basic and you're probably saying you're just preaching to the choir. I get it, but I needed to start with this today. So stick around for the next part of this series. That'll be episode 234 in 2 weeks. If you want to see the show notes to this episode or find links to anything that I've mentioned, and that includes, I think I mentioned a previous blog post or a previous podcast episodes, and the application to join Master Shopkeepers, will link that too. You can visit my blog at savvyshopkeeper.com/episode 233. At savvyshopkeeper.com/episode 233. Until the next episode, be savvy and boss up.